In this video, we will see if the decline in Swftcoin is over. Watch until the end so you don't miss anything. There is a downtrend in the SWFTC coin. The price is currently maintaining this downtrend, but if this trend is broken, it might be possible for the market to start an upward movement. If the price crosses the falling trend line upwards, this usually indicates that buyers are gaining power over the market, and the price could start to rise. Such a breakout could set the stage for a potential bullish move for the SWFTC coin. After the breakout, it needs to retest for confidence, and then it's ready to move higher. The chart shows a very similar pattern between the previous peak and the current one. Both the previous high and the recent one formed a double top pattern. A double top pattern usually indicates that the price has risen up to a certain level, only to reach the same level twice and not find the strength to rise further. This is often considered a sign that the market is about to turn. After the previous double top, the price declined and then moved sideways. This sideways movement indicates a weight between buyers and sellers, where the market is trying to find a balance. However, after the sideways movement, a rebound was observed. This pattern may indicate that the price is trying to break through the previous highs and potentially preparing for a new bullish wave. This chart tells us to be patient. The tops and bottoms have been consistently declining since the price top. This shows that the market is generally in a downtrend and buyers don't have enough power to push the price higher. The falling tops are causing buyers to stay lower at every attempt, while the falling bottoms show that sellers are dominating the market and continue to push the price down. This structure indicates that there is strong selling pressure in the market and that buyers are struggling to intervene in the market. If the price starts to make higher highs and higher lows, the trend will change. This support point that I have drawn represents a critical level where the price has been strongly supported many times before. The price has often bounced back from this level in the past, and this has been a zone of strong buyers in the market. Currently, however, the price has broken below this support level. This suggests that the market's previous buying pressure is weakening and sellers are taking control. A break below this support could be a signal that increases the likelihood of the price moving lower. If this support level continues to be broken, a new support level may be formed, or the price may go into a deeper decline. It would have been better if this support had not been broken. At the bottom, there is a bullish order block where the price may find support. This bullish order block represents an area where strong buying has occurred previously, and price can often tend to move in the opposite direction here. Unfortunately, price has now broken this support. This break could be an indication that the downtrend is gaining strength. However, this bullish order block still remains a valid support zone. If the price reaches this area, there is a possibility that buyers will step in and the market will start a rebound. So, holding on to the bullish order block could lead to a rebound in the price. Holding on to such areas could be supported by the re-engagement of previous strong buying. As a buy, this is a very good area. When the price moves higher, there is a good chance that it will get stuck in this bearish order block that I have drawn. The bearish order block shows the area where the price has fallen strongly in the previous period and marks a level where selling pressure is strong. Once the price approaches this block, sellers may dominate the market again and limit the price's upward movement. If the price reaches this bearish order block and encounters resistance there, it is likely that the price may revert back to a bearish trend. Such a situation indicates that earlier selling pressures are back in play, and the market is likely to correct again. The impact of the bearish order block could create a particularly strong wave of selling, and the area where this block is located, as an important resistance point, could cause the price to get stuck at this level and may not be able to break the bearish order block in one go. Looking at the price action, there was a distinct descending triangle pattern prior to the decline. A descending triangle pattern usually indicates that there is a contraction in the market, and the price is stuck at a certain level. This type of pattern usually signals a continuation of the downtrend, as the lower support level is tested more strongly, while the upper resistance level is continuously pulled down. When the price breaks the lower boundary of this descending triangle pattern to the downside, this is usually considered a signal that the decline has started. This break indicates that the market will move towards lower levels and sellers are taking control. A break of the descending triangle means that a huge selling pressure has come into play and the price will continue to move downwards. And that's why the price ended lower. Currently, there is an ascending channel structure on the chart. An ascending channel is a structure where the price moves within a certain range, and this movement is sandwiched between the upper and lower bands. Earlier, The price broke the middle band of the channel and then made a retest and fell downwards from this level. This kind of movement suggests that the middle band of the channel is now acting as resistance, and the price is struggling to break through this level. For now, the price is trading closer to the lower band of the channel. This suggests that the price may experience further squeeze within this channel and may try to move upwards by taking a support from the lower band. If the price tests the lower band and holds there, it is more likely to move back up within the channel. If it breaks the middle band after getting support from the lower band, it'll want to try the upper band. A break of this downtrend on the RSI indicator can be an indication that not only is the RSI moving up, but the overall momentum in the market is starting to shift. A break of the downtrend means that sellers are weakening and buyers are starting to dominate the market. This usually leads to a stronger rise in the price. If this breakout is strong and the RSI shows an upward trend, this could potentially signal the start of a longer-lasting uptrend. However, it is also possible that the RSI will make a strong retest while breaking the trend line. This retest would be a confirmation of the breakout and would indicate that the price can indeed sustain this level. If the RSI continues its upward movement after this breakout by retesting, it will be a sign that buyers in the market are taking a stronger position and the uptrend is built on more solid foundations. At the breakout point, if the RSI quickly moves above these levels, it would indicate that the momentum in the market is rapidly shifting in favor of buyers, and the price has the potential to reach much higher levels. If the RSI can sustain this rise, it is likely that the buyers will gain more long-term momentum and the price will move strongly higher. And remember that when the RSI goes up, the price goes up. On the Vortex indicator, when the blue line is on top, this indicates the strength of buyers in the market and the possibility of a continuation of the uptrend. On the flip side, when the red line is at the top, this usually signals that sellers are dominating the market and the potential for a bearish continuation. Currently, the blue line is starting to break out towards the top, which could be a signal that the market is starting to turn in favor of the buyers and the uptrend has begun. If the blue line crosses the red line upwards, this usually indicates the start of a strong bullish move. Buyers take control over the momentum in the market, and the probability of the price moving towards higher levels increases. After this crossover, if the blue line holds above the red line for an extended period of time, it could signal that the uptrend will be sustainable and buyers will continue to dominate the market. If the blue line continues to stay above it, the upward movement of the price could accelerate and a strong bull market could be seen. This kind of situation creates a strong foundation for potentially reaching higher price levels. Vortex shows us which trend we are in. It is a very good indicator for learning the trend. The price has been moving below the 200 EMA for an extended period of time, which is an indication that the market is generally bearish. The 200 EMA is an important reference level for determining the long-term trend, and when the price is below this level, it usually means that sellers are dominating the market and there is a high probability that the decline will continue. This indicates that buyers are yet to make a strong comeback, and the price has the potential for further declines. However, if the price breaks above the 200 EMA, this may signal a significant change in the market structure. A break above the 200 EMA could indicate that buyers have taken a stronger position in the market, and the uptrend has begun. This potentially means that the price could move towards higher levels. A break above the 200 EMA could also influence other traders, thus attracting more money into the coin. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.